Hello there, welcome back. I'm Rachel. You're watching 𝐊𝐿𝐴 TV live from Sydney. This is the Mid-Market Pulse. Let's get started with the mid-market commentary. The ASX was bleeding in the red around lunchtime today. Shares in EML Payments nosedived 37% on Irish woes. The benchmark index ASX 200 extended loss by afternoon as weak global cues and inflation fears spooked market sentiment. Snapping at three-session gaining streak, the S&P ASX 200 is trading lower by 120 points or 1.70% at 6,945. That's due to sharp losses across energy, materials and the financial space. The index has lost 1.41% in the last 5 sessions and currently trades 3.17% below its 52-week high. The market witnessed broad-based selling while energy was the top laggard, falling over 2.5%. Other sectors that witnessed a surge in selling include financials, industrials, healthcare, utilities, telecommunications services, consumer discretionary and consumer staples. Earlier today, the ASX 200 fell sharply in opening trade, with sectors in the red tracking weak cues from US equities, which closed lower overnight as investors weighed the rush to reopen the economy against inflationary pressure from a rise in commodity prices. The market also traded cautiously ahead of release of first quarter wage price index data and Westpac consumer confidence data. The Australian Bureau of Statistics released the wage price index data today, showing seasonally adjusted it grew 0.6% in the March quarter and 1.5% over the year. Wage growth is currently running at just 1.4%, compared with 2% in Europe and almost 3% for the United States. Investors will also keep a close eye on the analyst company Markets Manufacturing and Services Purchasing Managers Index flash data. Now let's move on to the gainers and losers. Buy now, pay later player EML Payments, as mentioned, is the top percentage loser on the ASX, dropping over 37%. Some of the other worst performing stocks include Perenti Global, St Barbara, Whitehaven Coal and AGL Energy. They're trading lower between 4 to 6%. EML Payments shares declined as much as 43.5% in opening trade after it came out of a trading halt this morning. The company says that the Central Bank of Ireland may take actions to restrict its Irish subsidiary PFS Card Services. That company contributes 27% of the group's global revenue. The CBI's concerns relate to anti-money laundering, counter-terrorism financing, risk and control frameworks and governance. On the flip side, technology firm Appen rose almost 12% and was the top percentage gainer on the benchmark so far today. The company on Wednesday released business and trading update for May. It has announced a new organisational structure aligned with the company's product-led and consumer-centric strategy. That's as well as changes to financial reporting that provide greater visibility of the drivers and performance of the business. Amongst others now, Nuix, Eagers Automotive, Credit Corp Group and the Flight Centre Travel Group were among the notable gainers on the ASX so far today. Moving on to the shares that are in the news today, St Barbara extended a fall for the second session, dropping over 5%. That's after the gold mining company lowered its production guidance for the 2021 financial year. The company had lowered guidance due to muted performance at its Leonora and Simberi operations in Western Australia. That was amid negative grade reconciliation in both Stope ore and Jasper stockpile material. The gold miner has downgraded production guidance for the financial year 2021 to between 330,000 and 360,000 ounces, as compared to the previous estimate of 370,000 to 380,000 ounces. Moving on now, shares of United Malt Group gained 2.71% to $4.54. That's after the company released earnings for the half year ending 31st of March. It has reported a fall in top and bottom line growth due to the challenges posed by COVID-19. The revenue fell by 11% to $590 million. The That's as coronavirus affected the volume and changes in product mix in the company's key geographies during the period. EBITDA was $52.7 million, slightly ahead of the guidance provided by the company at their annual general meeting back in February of $47 to $50 million. Moving on now, the share price of Bard1 Life Sciences rose 6% to $2.61. That was after the company will be producing a poster entitled ExoNet. It's a novel, rapid, scalable exosome isolation technology at the Virtual International Society for Extracellular Vesicles at their annual meeting. Extracellular vesicles are particles that are naturally released from a cell and, unlike a cell, cannot replicate. The results say that ExoNet is a novel approach for the rapid, pure and high-yield capture of exosomes, which contain things like protein and DNA, from complex samples, including bodily fluids such as plasma, urine and saliva. Moving on now, Great Boulder Resource shares jumped 15% to 10.5 cents after the company announced it had secured binding commitments to raise $5.5 million at 8 cents each share via full placement capacity. And Strandline Resources has announced continued implementation of its flagship Coburn Mineral Sands project. The company has secured a binding offtake contract for its premium zircon product, a Mario Palato Blatt SA. The company distributes industrial raw materials in Spain. Strandline Resources shares traded 5.128% up at 20.5 cents. BNK Banking Corp has agreed to enter into a non-binding agreement with Goldman Sachs. The initial alliance would be for 5 years. The alliance gives Goldman a chance to initiate, fund and scrutinise housing mortgages in Australia, boosted by the development. Shares of BNK Banking Corp rose 4.17% to 75 cents. Moving on now to a special report today. Carsales.com opened the retail component of its entitlement offer, which was unveiled on the 12th of May. The company has also successfully completed the institutional component of the underwritten 1 for 6.99 pro rata accelerated renounceable entitlement offer. Carsales.com is raising a total of $600 million. The proceeds will aid in the acquisition of a 49% interest in Trader Interactive. The acquisition price is estimated at $624 million or approximately 797 million Australian. Under the institutional offer, Carsales.com raised $428 million, with the shares offered at a price of $17 per new share. Carsales received strong support from institutional shareholders, with take-up of approximately 83% by eligible institutional shareholders. The new shares will rank equally with existing shares from the date of issue and are expected to be settled by the 21st of May this year. Carsales.com opened the retail entitlement offer on the 19th of May, which is set to close on the 2nd of June. Carsales seeks to raise $172 million through the issue of new shares to eligible retail shareholders in Australia and New Zealand at an offer price, as mentioned, of $17 per share. On specified terms, the company has a call option to acquire the remaining interest in Trader Interactive. Post the acquisition, the company expects to maintain a strong balance sheet. The transaction is forecast to be earnings per share positive from the completion. The deal is subject to customary closing conditions. Carsales.com shares were trading higher by 0.117% to $17.09 on the 19th of May. That was at just after lunchtime, Australian Eastern Standard Time. The company has a market capitalisation of $4.21 billion. Moving on now to the Asian markets, which are trading lower on Wednesday, with Japan's Nikkei 225 leading the fall. The Japanese market was down 1.5% amid concerns around coronavirus pandemic and the fragile economy. The country's GDP declined 5.1% in the March quarter on an annualised basis. That's its worst pace since World War II. China's Shanghai Composite and Taiwan's Taiwan Weighted Index were down 0.5% each. while New Zealand's benchmark, the S&P NZX 50, traded lower by 0.9%. Moving on to the next big news in the commodity space now. Crude oil prices slide after hitting 2-month highs amid reports of progress on the US-Iran nuclear talks. Brent crude futures trade down by 1.1% at $67.94 a barrel, and US West Texas Intermediate futures dropped by 1.15% to $64.75 per barrel. They're weighed down by a sharp fall in the oil price. Shares of Woodside Petroleum, Origin Energy and Oil Search were all trading in the red. In the bullion market, spot gold price trades lower by 0.11% to $1,867.25 an ounce. That's pairing early gains. On Tuesday, gold prices closed on a 4-year high due to weakness in the US dollar and a fall in treasury yields. ASX-listed gold mining stocks such as Resolute Mining and De Grey Mining were also trading in the red by the afternoon. Moving on now to another talked about space, cryptocurrency. Most of the cryptocurrencies were trading in the red during the Asian trading hours on Wednesday after the People's Bank of China said that digital coins cannot be used as a form of payment. The prices of Bitcoin tumbled 7.6%. That's after the world's second largest economy, China, banned financial institutions from offering Bitcoin and all other cryptocurrency services to clients. This was announced in a joint statement by the National Internet Association of China, the China Banking Association and the Payment and Clearing Association of China. This was over concerns of volatility and speculation in the digital assets. Now, quoting recently, cryptocurrency prices have skyrocketed and plummeted, and speculative trading of cryptocurrency has rebounded, seriously infringing on the safety of people's property and disrupting the normal economic and financial order. That was what was quoted in the statement. The three bodies are of the belief that digital assets aren't supported by real values and that their prices can easily be manipulated. However, this ban on cryptocurrencies doesn't mean that China has made it illegal for individuals to hold digital assets. Earlier, when Nigeria made such a move, the peer-to-peer trading among the cryptocurrency holders surged by 27%. After the announcement was made, the cryptocurrency prices, especially those of Bitcoin, plummeted. The world's largest crypto crashed by 7.8% to touch 42,349.15 cents level. However, later in the day, it recovered partially and is now trading at $42,430.89, down 5.39%. Ethereum was also down 1.96%. China's latest ban comes days after Tesla boss Elon Musk's tweets netted several blows to Bitcoin, leading to considerable decline in its price. That's all from me for now. Keep watching 𝐊𝐶𝐞 TV as we bring you the latest news, trending market updates live from Sydney. I'm Rachel, signing off for now.